ambition. Easy to dream a dream, though it's harder to live. They gon' love me for my.
Ladies and gentlemen, welcome to our weekly trade recap. This is where we recap the trades that we have executed for this week. Remember, the pairs that we are executing for this week are the pairs on our top 6 list. Remember, we have forecasted our top 6 list on the Monday trade focus. To check the video on the Monday trade focus, check the link in the description below. Check the video. So here we have EURNZD from our top 6 pairs. So the EURNZD, we have taken a short trade, and if you check the Monday trade forecast, you could see that we were looking for a short on this pair. We're looking for a sell on this pair to the low of that area as our first target, and overall target to the low of the whole structure of the EURNZD. Before anything else, let's dive much deeper into the charts. Now we're zooming out to see the overall picture of the market. Now zooming out to see the clearer picture, you could see we've been forming our higher lows and lower lows as our downtrend progresses to the downside. And now we have that impulsive move to the downside, then forming a correction, then we're expecting an impulse to the downside because this is a continuation pattern to the downside. So that's our clear structure to the downside. As you can see, that's a continuation pattern to the downside. Our correction, which is a continuation to the downside. And as you can see, the structure, the overall structure is 1, 2, 3 structure. It means it has 3 touches, which is 3 touch confirmation, means it's a high probable structure. So you know the highest probable structure. Now we move within the structure. Within the structure, you could see what we were looking for. What we were looking for within the structure was just nice double top there. We're looking to form the double top there, 1, 2. We're looking to come to the trend line for a second touch before going for short trades, before going to the downside. So as you can see, within that channel of us, we've been moving correctively to the upside. We've been moving with low momentum to the outside. This shows that we are likely to reverse. So we're hoping that the market's gonna reach that. From the market nature perspective, we have impulse, correction. Now we're looking for an impulse to the downside. Now we move to the 4-hour time frame, just to dive deep into that channel to see the market nature within that channel. As you can see how we executed our trade on the 4-hour time frame, it's very clear now. Let me zoom out so you could see the bigger picture. You could see the whole trend line and the whole movement. You could see within the trend line, we had the 3 touch structure in that trend line, and within the trend line we had an ascending channel. But let me zoom out so you can see what I'm talking about when I say we had a 3 touch structure. We had that first touch there, second touch there, and third touch we had a confluence with our ascending channel within that structure. But as you can see within the structure, we've not taken our trade from the top, even though we had that nice ascending channel, which is also a 3 touch ascending channel. You can see there we haven't taken the trade. The reason we haven't taken the trade at the top or at the third touch confluence of that channel is because we knew there was a high probability that we could break out of that channel to reach the top, or we could go down to that channel just to correct before moving to the top area, because that's our high probable trade. Because now what we're looking for is that double top there. But that doesn't mean we cannot take any early trade. So this is what we call a value trade, because it has high stacked confluence. We have confluence that we have stacked up within that. You can see using the channel. Now we have that impulse to the downside and another correction within that bigger channel, and then an impulse to the downside. So we saw that and we decided to take the trade after that impulse. We seen that nice correction there, and we were expecting another impulse to the downside and break out of that structure. That's just the probability from the way the market is playing. Let's move to the 1-hour time frame to refine the structure. to show you how exactly we enter the trade. So on the 1 hour time frame, we've waited for the second touch on the structure. You can see we had a second touch before having that. After having that spike there, we had our our touch. This is where we entered on the trade. Looking at that previous impulse, it's been highest probable for us to take the trade there on the third touch with the trend line. And you can see at the bottom of the structure we have a clear bottom of the structure. So for me, this was high probable trade, even though it was not at the trend line. It was not at the double top area. So even though we've taken this trade, we know that there is other possibilities within the market. So we've managed the trade accordingly. We've moved our stop loss, because sometimes you have to lock in some profit. You have to protect your capital. So we knew that this structure here that we have, this what we're forming, could just be another flag to go to the upside. Just could just be another correction for us to go to the downside. We're retesting. It could happen that we just retesting that low of the trend line before going upwards, before the beginning of our long-term sales. So we know that, we keep that in mind. So we're gonna use that in our management. When managing the trade, we're gonna know that, okay, this is a possibility within the market and how we can counter that. So we have moved our stop loss according. So this is how we moved our stop loss. We've moved our stop loss to the beginning of the correction of the flag within that bigger channel. So this is where we moved and secured our profit. We waited for an impulse breakout of that flag. Then we moved our stop loss to the low of that flag, which is that trend line. We moved to the trend line of that flag, and we waited for breakout of the outer trend line before moving our stop loss to the low of the trend line, because we knew what we know and what we can see in the markets, that there's a possibility that what we're forming here could just be a possible flag to the upside to continue and move to the second touch of our double top. So we're keeping that into mind, and we know we're using it when managing the trade. So we're using the market structure, the possibilities to mark when managing the trade. So we're managing the trade accordingly. Now we moved our stop loss to the low. We secured some profit, but we're still holding and we're still within the trade. So seeing where we initially moved our stop loss and what could cause us to move our stop loss even lower is if we see another market nature saying that, okay, we're having a correction. If we have a correction, that implies that we are ready to short trades. We are ready to scale in, enter more short trades to the downside. Scale in within that market. All we need is further confirmation, because we had that impulse correction. If we have another correction, we knew that would be a continuation to the downside. Then we'll take that trade as we wait for another impulse to the downside. So the only thing that could show that we are really into sell is another continuation to the downside. If we have a clear continuation flag to the downside, this could show that, okay, we have started early sells, so we can start scaling in into the market and taking short trades. But now we've moved our stop loss to the low of the structure, to the beginning of the flag, of the bearish flag to the downside. That bearish flag where we've taken a trade, we've moved it to the low of the structure, giving the market enough room to breathe, enough room to retrace back and still continue in our direction, because sometimes the market needs to retrace back and then still continue in our outline direction. So we need to give it room and still have to lock in some profit so that we don't give back our money to the market. So this is where we move our stop loss. We're still in the trade, we're still holding the trade, we're still holding the trade straight to the downside. So what we could have, what we could have within this trade, we could have just a small impulse, because we broke out impulsively out of that trend line. This just automatically activates the 90% rule, we could just have that impulse, then correction, then we'll be waiting that for that impulse to the downside. So we'll take the trade knowing that there's gonna be another impulse that's forming to the downside, which is going to be a continuation to the sell that we have taken there. Any flag, it's very probable because we had that first impulse correction. Now second impulse, if we form another flag, it's going to be forming part of that third impulse. We could have a tie flag or larger flag. That will be a good trade to the downside of that market. That is all from our trade recap. Thank you for watching.
Love me for my ambition. Easy to dream a dream, though it's harder to live.